Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me today is Tai Wong, independent proprietary trader. Tai, good morning and happy Fed Day.
It is Fed Day, the final meeting of the year. Could be a pretty important meeting, even though the market is really thinking, is 25 basis points. I think that's really locked in. There's no anything else would be a big surprise. But it's the rest of the sort of the Fed meeting, the so-called dot plot summary of economic projections, as well as Chair Powell's press conference. That's really, I think, will set the tone in the short term, unless for certainly the rest of the year, and maybe through the beginning part of January until the inauguration, until what we see. And we're also, shockingly, a week from Christmas.
I know, it's hard to believe. Where did the year go, Tai?
Yes, indeed. Yes, indeed. Well, today we always like to start with what kind of day it is.
Yes.
Well, it's Brad Pitt and Steven Spielberg's birthdays.
Well,
Steven
happy
Spielberg,
birthday.
78, Brad Pitt, 61. I remember him when he was a young lad in Legends of the Fall. And boy, did he look good then, huh? Still looks pretty good now, I have to say. And then for the history buffs in there, in 1917, December 18th was when the Senate passed Prohibition. And, the 18th Amendment lasted for 13 years before they pulled it back, but it led to a lot of things that they didn't really understand. It had overwhelming support, and then everybody was happy to get rid of it 13 years later.
Well, it's hard to believe how much time has passed since that movie you mentioned.
Yeah, right, right.
It really does speak to the fact that we're here 2024, last full trading week of the year, Tai, and that means the New Year is only a few days away, a few weeks away, so the countdown is on. But here in New York, we're here at the 11 o'clock hour, 2 p.m. We get that Fed rate decision, followed by the summary of economic projections, as you mentioned, and Jay Powell talking.
Let's take a closer look at that. If we could get graphic number 1, I hope it is. So this is the Fed projections and the dot plot. And these are both from the Fed website, and I think the two most important things that on the left side is where the projection of the unemployment rate is going to be. So you can see that in June the Fed average the median was 4%, but they moved up to 4.4%, and the direct result of that was the Fed funds rate in June was expected to be just over 5, but shifted 70 basis points lower to 4.4. So today we're going to end up at 4.4 after the rate cut. But the question is, where is the Fed funds rate going to be in 2025? In June, end of 2025, the Fed thought it was 4.1. It was going to be 4.1, but they again moved it 70 basis points down to 3.4. The market isn't sure. I think the market figures it may be a 75 basis point reduction for all of 2025 rather than 100. I think that will keep the market sort of where it is. If it remains at 100, I think the market will like that. At least the asset markets, I think bonds will like that. I think stocks will like that. That the Fed still looks like they have room to cut. But if they reduce it down to 50 basis points of cuts only in 2025, I think the asset markets will have potentially a very, very weak close that may continue through the rest of the week. Only 50 basis points will make the market worry. On the right side, I'm showing the actual dot plot, and I've drawn the yellow circle around the dots from September, and that's a 2025 set of dots. So if you look, they're pretty heavily centered towards the middle. So moving from 100 to 75 is possible, but it would still require a lot of Fed governors and presidents to move their dots. To move at 50 would be a big move. Wouldn't be a surprise given how much they moved it last time, but I think a move towards maybe 75 basis points of cuts, and then we'll look at the press conference. Do we have what they call a hawkish cut, where it's a cut, but we're continue to be data driven. We're much happier with rates where they are now than we were before, and just yesterday I noticed, or last night I noticed, that Nick Timiraos of the Wall Street Journal had a piece out, and he is sort of the Fed whisperer. I mean, I really think he is the weather vane telling you where the Fed is going to go. So I'm going to read just a paragraph from what he wrote in the Wall Street Journal. It says, Fed officials have signaled recently that a rate cut this week could conclude the first of a two-step phase in lowering rates. In that first interval, officials had a relatively low bar for cutting rates because they had held borrowing costs at such a high level. Some have begun to signal that they would need to see more concrete evidence that inflation is improving or that the labor market is decaying before continuing to reduce borrowing costs. So inflation is steady, but not really dropping significantly more than it has dropped recently. The employment situation is also seems to be relatively steady, though I suppose a slightly weaker employment outlook may be what the market is concerned about, but it depends. We do have the new administration coming in, and it is unclear what is going to happen. The other thing to watch is to see if the Fed, if Powell says anything about we're trying to model what's going to happen. I don't think he's going to do that. I think he's going to say we will see policy when it comes. Nothing is really directly obvious to us right now. So, but it depends on what tone he says. If he says we're satisfied with what we've done so far, and we'll look at the incoming data, the market may interpret that a certain way.
And when it comes to economic data and, of course, the Fed's dual mandate, we'll have to continue to monitor those data points. And you have the PC inflation up there. That is something we will be getting at the end of the week on Friday morning alongside the personal income and spending figures. But as you mentioned, inflation does remain a concern moving forward, especially if we take a step back and look at where we were at the beginning of this year, and considering that energy prices have been coming down as well.
That certainly helps. Certainly helps the headline, helps other things along the economy with lower energy prices. But inflation has been frustratingly sort of steady between 2.5 and 3, not close enough to 2, not getting really down to 2 where they feel like they have clearance to cut more. So now they're probably looking at the employment indicators as they have over the past few months to say, if this weakens, if we get the average of new jobs created, new payrolls down to 100, maybe they feel they could do another 25 for 50. But they're looking for, I think this Fed will be looking for a reason to cut. I think it'll come from employment rather than inflation come the new year.
Well, speaking of which, here we are on Fed Day, the final Fed meeting of 2024. And initially when the markets opened, we saw the Dow higher, trying to snap a losing streak that they've been seeing, because we have been seeing a divergence between NASDAQ, S&P, as well as the Dow. So why don't we do a quick market check? And this does come on the heels of the latest data this morning on housing starts as well as the current account deficit. So in terms of the Dow Industrials this morning, we are looking at it higher on the session, up by over 180 points, or 0.4%, but it does remain well below that 44,000 level. The NASDAQ has managed to climb higher this morning and is up by 0.3%. S&P 500 managing to hold above the 6,000 level and is up by about a quarter of a percentage point. So, Tai, this morning we did get some housing starts number. That was a mixed data point because we saw housing starts lower and come in at 1.29%, 29 million, excuse me, and the drop in multifamily projects offset a rebound in single-family starts. But for the year, housing construction is down by nearly 15%. At the same time, we saw building permits rise more than forecast.
The building permits number, that big jump was sort of good news. It forecast that there are permits and then there'll be more building over the next few months. And as you said, starts single occupancy was up, but multifamily dropped a lot. And one concern that they're getting with single family homes, which really helps drive the economy, is that they have a lot of inventory. They've built a reasonable amount this year, and they're not exactly flying off the shelves. As a matter of fact, a lot of these home builders are offering sort of discounts or initial mortgage pay downs, like buy this house and we'll give you X months of, we'll pay the X months of the first mortgage payments. One of the reasons why the home builder stocks have been hit, because they can't really move these things because mortgage rates are too high. People who have housing are locked into their housing. They don't want to upgrade because they don't want to move from a 4% mortgage rate to, today it was up
Yeah.
8 basis points. I think it was 675. So, and mortgage applications had dropped sharply this past week because the Fed is expected to cut this week, and everybody, is either we're not buying a house at, just in front of Christmas, or the Fed's going to cut. Let's see what happens afterwards. So, a little of a conundrum for them. If we don't get rates substantially lower, and I don't think we will until at least at least the second half of the year, depending on how it goes. These this inventory will sit on the balance sheet of the home builders, and they may be reluctant to really start building more until they move some of that inventory. In January, it's sort of 80% of the market doesn't expect to move in January, and in March it's sort of a 50-50. So it'll be some time before rates drop significantly, and certainly before mortgage rates get to something like 6% or below 6%, when we think the market will really start to warm. And if we ever get to 5%, it might get pretty hot. But the prospect for a 5% mortgage rate means I think something else bad is happening in the economy.
Well, a lot to keep in mind there when it comes to U.S. housing. So I do want to shift our focus on over to Washington, D.C. So lawmakers unveiled a spending package to avert a shutdown.
They did.
So what's going on here, Ty?
Well, not most people hadn't paid much attention to it because they thought something would pass. But the deadline is Friday. If something doesn't go through, if a bill isn't signed Friday, then there's a partial government shutdown right in front of Christmas. Will make a lot of people unhappy. But they eventually got it through. I think it's some 1,500-page continuing resolution bill. Somebody showed a picture of it, and
that is
there's
a long one.
There's something in it for everybody. Looks like it will. They haven't had the votes yet. And Mike Johnson is going to have to rely on some Democratic votes, if not a lot of Democratic votes, to pass this, because the sort of the Tea Party, of what's left of the Tea Party, and the fiscal hawk Republicans will not want to vote for this, and there's only the margin in the House is just a handful of seats. So I expect that since everybody wanted to pass this and and go home, it's going to pass comfortably with a fair number of Democrats, and then it should pass the Senate, and President Biden will sign it on before either tomorrow or Friday, and we'll be fine. But it actually got very little attention, maybe more of a dogfight, because this continuing resolution gets the government funded till March 14th, and then that'll be the new administration. It'll probably be a dogfight in that, and I think there might be. Remember last time we had to elect a speaker when McCarthy needed 15 votes to get through? Well, Mike Johnson hopefully will need less to become Speaker of the new Congress.
Yeah, I think the government shutdown was not top of mind for many people as we head into this week, especially ahead of the holiday weekend and year end. But that is something that we will keep our eyes on as we head into the final days of this year.
While we're on the subject of Congress, we talked last time we were on Monday about a vote whether Alexandria Ocasio-Cortez, AOC, was going to become the ranking member of the House Oversight Committee. It turns out she lost that vote from the Democratic caucus, 131 to 87. So she got a lot of progressive support, but sort of the mainline old guard Democrats, the Pelosiites, the Jim Clyburn, Steny Hoyer, the folks who've been there for a long time, were able to exert enough influence to say, we just got walloped because we got too progressive and we focused on things that most of the country didn't care about. So it's I think a temporary setback for her. She's very young, she's dynamic, she's charismatic, whether you like her or not, and she has probably a long future in politics.
And of course, while we're talking about politics, I do want to shift our focus overseas. So when we take a step back and look at everything that's happened politically this year, of course, here in the U.S., the focus has been and is on the post-election environment, what's going to happen in D.C. heading into next year. But of course, when we look at what's happened in France, Germany, South Korea, and even Canada as well, there's a lot of ground to cover. So let's start out with Germany and their outlook.
Well, Germany is interesting. The current chancellor, I should say, is their term for it, Olaf Scholz of the Socialist, the SPD, called a confidence vote that he knew he was going to lose. They called that vote to have so they could have a new election. They had already agreed with the opposition that the new election would be February 23rd, and um, and the reason he had to do that was because he had cobbled together. They call it, they called it the traffic light coalition. It was sort of like the Greens who were red, the Free Democrats who were green, and the SPD, the Socialists, who were yellow. But the green light or the Free Democrats were got tired of the sort of spending that they thought they didn't want to see, and quit the coalition. So that without the Free Democrats, he didn't have enough a majority in Parliament. And anytime when you don't do that in a parliamentary system, when there's a big vote that comes through, you're going to lose and your government falls. So it's a caretaker government until February 23rd. Now it looks like the Christian Democrats, that's Merkel's party, and Merkel was chancellor for 16 years, is likely to come out and be the biggest party coming out of the elections in February. The problem with Germany is they're very fractious. They will almost certainly not get a majority, the Christian Democrats, and it's a question that typically the Free Democrats are their usual historical allies. Even the two of them, if the Free Democrats make it into the government, because you have to make 5% to get into the government, won't be enough. So it'll be some other coalition government. It could be what they call a grand coalition between the Christian Democrats and the Social Democrats, where, the problem is when you have coalitions like that, nothing really gets done. Just as an example, the Social Democrats want to prime the pump, spend more money to get the economy going again, and economically they've had significant troubles. One of the biggest drops we had in recent memory in the euro was in late November, when they'd shown that France and Germany both, basically their economy shrank in the latest reading. And those are two engines of growth of Europe. Germany has a big problem. They use very effectively for a long time industrial policy, focusing on manufacturing, on exporters, on generally a weaker euro than a German Deutschmark would have been, and they built their economy on exports. Well, all of a sudden, the car exporting companies are struggling in China, struggling in the U.S. They've had to boost defense spending. They probably need to boost it more because you have a problem in Ukraine in the east, and we don't know how that's going to turn out. And Russia, the bigger problem, obviously. So they're also reliant on the Russians for energy. So they have and there's been a lot of articles about this. So sentiment is quite poor, but their industrial policy is now at a crossroads. What do we do next? And the Christian Democrats actually want to cut spending, and there's something called the debt brake in Germany, where they passed a law where you can't have deficits bigger than X. And part of this is literally the PTSD from almost 100 years ago, when they had hyperinflation in Germany, and it destroyed the German economy. It destroyed all the hardworking Germans who saved assiduously, caused an earthquake in the country, and led to the rise of Hitler. So that PTSD is still in the country, although all the people who lived through that are gone, but they really cannot spend. And so it's struggling. And you can see the euro below 105, possibly headed lower towards parity, maybe sometime in the new year. But there are big issues in Germany, and it's because there's the structure of their government forces coalitions, and it's hard to do anything with coalitions.
And I think you gave us a great overview of what's happening in Germany, and you mentioned the euros. So on the heels of last week's ECB rate announcement, this really does speak to some of the challenges that the central bank deals with, because it's not just Germany or France, it's all the other nations that are part of the Eurozone as well.
Right, and it's always a fight between sort of the northern Europeans who want tight monetary policy and a stronger sort of currency, or sound money, and the South, which typically struggles with growth and wants lower interest rates. But right now, Germany is struggling, and France is struggling, and Macron has a lot of problems that he's going to try to muddle through the next year until 2026 when his term is up.
Yeah, and Ty, I think earlier this year we're talking about some of the divergence and how in the past we referred to the pigs nations within the Eurozone. So this is something that you and I will continue to monitor heading into year end as well as the new year. But now I do want to shift our focus to our neighbor in North America, up north in Canada. So Justin Trudeau has a lot of challenges to deal with, and when it comes to his finance minister resigning, what is he going to do next?
Well, it remains to be seen. I mean, if you've looked at Justin Trudeau through the years, and I mean, I don't watch him like I watch American politicians, but I do because in the old days in the 90s, I traded dollar Canada for a number of years. So I usually pay attention to Canada just out of habit. Then I worked for a Canadian bank for over 10 years, so I do pay attention to Canada. Trudeau is a type. I don't think he's going to give up power. I think he's going to hang on as long as he can. And in Canada, it's pretty hard to unseat the prime minister. So if he wants to stay there, he's going to stay there until the next election. But that said, on Monday, when finance minister and deputy prime minister Chrystia Freeland resigned, she didn't just resign and say, I'm going to resign, I'm going to go home and spend more time with my three kids and my husband. She published a scathing resignation letter. And I'll read a little bit to it because it was really for Canada, who's known for being really polite. This was anything but. She said, "Our country today faces a grave challenge. That means keeping our fiscal power dry today so we have the reserves we may need for a coming tariff war. That means eschewing costly political gimmicks which we can ill afford and which make Canadians doubt that we recognize the gravity of the moment." And that was sort of from probably generally a very popular liberal politician of the Liberal Party. That was political gimmicks. It's what they're trying to do to sort of gain a little favor, $250 checks and tax holidays on certain things like toys and Christmas trees or something like that. And I think they had a big fight on how to face off with Trump. And I think Trudeau wanted to move her to a different portfolio, and she resigned instead. Certainly, the stock market didn't like it, but it didn't move tremendously, and dollar Canada has lost 0.5%. It doesn't sound like a lot, but the Canadian currency moves generally quite slowly. The historical volatility is low, but it's going from the lower left to the upper right, and looks likely to continue that way because the Canadian economy is not doing well. They'll need to cut rates faster than the U.S. So that means a higher dollar Canada. So if you want to go visit Canada and the lovely French restaurants in Montreal, this would be a really good time to do it. It'll be a little harder for the Canadians to come shop here. Freeland has had a very good history in terms of being a great defender of human rights. She worked in Ukraine and Russia. Well, at one point was persona non grata in Russia because what she did for Ukraine. Generally very well regarded, considered very smart, and I think she may be the next sort of head of the Liberal Party. It wouldn't surprise me. She could be the next Liberal whenever it comes, the Liberal Prime Minister of Canada. I think Trudeau, whenever he's done, will probably be done, but she's very well regarded. There are some criticisms that when there was the huge trucker strike, she was at the finance ministry and she shut off their access to their own funds, and that earned her a lot of enemies. But other than that, that's a big deal. I mean, if that happened in the U.S., there would be hell to pay. But very highly regarded minister, and the way she resigned was a shock to the Trudeau government.
And we know that since the November 5th election here in the U.S., that President-elect Trump has been receiving a slew of visitors at Mar-a-Lago, Trudeau being one of them as of late. So we'll keep an eye on the loonie as well, the Canadian currency.
Yes.
I've always liked that name for that currency, but as you mentioned, it could get pricier for visitors from our neighbors up north.
Yeah, beautiful time to go to visit Toronto or visit Montreal, and Donald Trump just never, he keeps poking him about you're the governor of the 51st state. It's a great state, and of course she said Chrystia Freeland, she was totally toxic. He just can't help himself.
Well, Tai, as we head into the final minutes of our show today, we know that heading into 2025, there are a lot of expectations for the markets. And when we're talking about sectors, of course, we've been looking at double-digit percentage gains for certain areas of the S&P 500, like communication services, financials, industrials, IT. But when we're looking at factors here in the U.S., there are hopes of a better market for IPOs as well as M&A. So in terms of M&A, what comes to mind first and foremost?
Well, I think you're going to see just generally sort of more of it, in different sectors in the U.S. I don't know if they'll try to bring back some of the mergers that have failed. That Kroger Albertsons one, which seemed like it's, well, as we said at the time, supermarkets are a tough business.
Yes.
They don't really overlap,
Yeah.
so let them merge and have a little more pricing power. Because honestly, I mean, unless you're the only supermarket in the area, and they're getting their lunches eaten by people like Costco and Walmart, which have a tremendous amount of pricing power and have a lot of people coming to the door to do other things. Could we see something? Could we see something in telecoms? The telecom industry, can be, is struggling a little bit. People continue to cut the cord. Do we see something in? We had a guest here who talked about the banking, that mid regional banks, that could be taken out because they're at attractive levels and below the level where they're they have to have more strict oversight. If you go over 100 billion, that happened in New York Community Bank when they bought somebody else and they didn't realize it, and that caused a huge problem when they had to say, oh my goodness, we have to set aside $2 billion in additional because we're now just a bigger bank, and they ended up needing sort of a bailout from Steve Mnuchin and company. But on the subject of mergers, one merger that really, not in the U.S., but that really struck me was seeing that Honda and Nissan are talking about a link up, and Nissan rallied like 25%. Honda dropped 3%, but it looks like Nissan has had some issues in the past. They linked up with Renault, and they brought in Carlos Ghosn, who was a vicious cost cutter. I think eventually they got tired of him, and I think he was forced out, and he had to, in fact, escape jail by escaping in a suitcase. Which was really, so he has to like stay in Lebanon because the Japanese want him back in jail. Whatever it was, it looks like Nissan's struggling in China and also in the U.S. because their lineup is sort of kind of old. There's nothing exciting about Nissan cars, I guess, and they don't have a hybrid. At this stage, you need to have like at least one hybrid. So they have a lot of inventory. They're struggling. Their profitability dropped 95% I think in the most recent quarter. I can't remember if that was for the entire year, and they're looking for help. And apparently Foxconn, the maker of the iPhones and a gigantic enterprise in China, was looking very, very closely to say, are we going to make a big investment, or do we want to even maybe try a buyout? And I think culturally for a Japanese car company and one as big as Nissan, that might be difficult to swallow. So there might be some legs to this hooking up with Honda. And if we look at graphic number 2, I just took a look at Nissan and Honda, and on the left side, that's 20 top-selling brands in 2023. If you combine, so Honda's number 3, Nissan's number 6. If you combine the two of them, they still don't quite add up to the cars that Toyota sells. For 2024, Toyota and sort of their associates, like associated companies that they don't own but they have a lot of interest in, like Subaru, Suzuki, and Mazda, are going to be about 10.5 million cars, whereas Nissan, Honda, and Mitsubishi, with whom they're also associated, is probably looking at 8 million cars. So we'll make them a bigger player. Maybe they'll have some, an injection of ideas and of funds. And then if you look on the right-hand side, you look at actually in terms of market capitalization, outside of Tesla, which is in some ways had a ridiculous 1.4 trillion valuation, and they're way down at the bottom on the left in terms of the cars that they sell. But part of that is Elon Musk, is practically in the administration, right? Well, not practically. He is sort of in the administration, though not officially. So outside of Tesla, Toyota is really the elephant in the room. Now followed quickly by BYD, the Chinese electric car company, and then Honda, Nissan, and Mitsubishi together, are still, sort of just a middling compared to where Toyota is. But so this is an interesting story. Certainly a little bit of a shock. I mean, Americans only really know as a practical matter, three car companies, right? Always buy the Toyotas, they'll last forever, and they do. I have a Toyota Sequoia from 2002, 186,000 miles on it. Never selling that car. I'm going to drive that into the ground. But Honda and Nissan, those are all Americans know. So if Nissan can take advantage of this and freshen up their lineup, I mean, it is a venerable company. It has some, historically has some great cars. The Nissan Sentra was on the road for forever. The Pathfinder for road forever. They needed a little sort of help, and I think they may be getting it from Honda.
Well, Tai, that chart you had up there, that graphic, it really does show how far these companies have come. And when it comes to Elon Musk, how many pies that he actually has his hands in as of now.
Amazing, isn't it?
It is. Well, Tai, it has been a pleasure navigating and covering the markets with you this year. So happy holidays, and thank you so much for weighing in with all of your insights this year.
Always glad to be here. Thank you so much.
Thank you so much, Tai. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Stanford TV, and you can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us. Have a great day.